Third time's a charm. Hello, 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 everyone, and welcome back to another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. Thank you, y'all, for tuning in. So, a little bit of technical difficulties today. Hopefully, we can get through this live smoothly moving forward. But yes, I'm going to go ahead and jump right in. For those of you that are tuned in, be sure to hit the subscribe button on the YouTube channel Sipping Wealth, as well as making sure that you are a part of the Sipping Wealth group on Facebook. Alrighty, y'all, gonna jump right in. Let's go. Alrighty. Of course, it's not working. All right, so I will be going over the different proposed tax updates from President Trump and how it might be affecting or how it can affect taxpayers yourselves. All right, so I'm going to start off extension of the 2017 tax cuts. So this proposal specifically speaks to extending the Tax Cuts and Job Act and making it permanent. So some of the big changes that happened with the Tax Cuts and Job Act were increasing the standard deduction and also doubling that child tax credit. So if this provision is not extended, then what's going to happen is a lot of taxpayers are going to see an increase, or I should say a decrease in refund, and essentially an increase in their tax bill starting in 2026 because of that decrease in the child tax credit as well as the standard deduction. Um, and essentially, Trump is proposing to make these cuts more permanent so that we can continue seeing that benefit from lowering the income tax rate. Oh, let me make sure this is. Alrighty. Okay. All right. It says it's up. Okay. Um, another thing is these tariffs. So the universal baseline for the tariffs. I know a lot of you have already heard about the tariffs. I mean, it's been huge in the media. There's been a lot of talks about the tariffs between China, Canada, all that good stuff. So of course, I was going to come on the live and speak about it as well. So there is a proposed 10% tariff across the board on all imported goods and higher penalties for other countries. So that's like your China, those Mexico, those countries that you've got have been hearing in the media. So you're looking at a essentially universal baseline tariff of about 10 to 20%. Yes, there's going to be quite a bit of effect as far as what we can see as with purchasing goods. So there is going to be a higher cost generally for purchasing goods for business owners and consumers across the board, and that's for like everyday products. Like electronics, clothing, raw materials, a lot of the things that come from overseas. So if these businesses are seeing an increase in purchasing these products, say if it cost them before $10 for a particular product, and now they're getting hit with the 20% tariff, Well, now it's costing them $12. So that $12, that item that they sold for, say, $24 or $20 is now going to be, say, 25 or $24 to compensate for the increase in tariffs. So you will kind of see that effect on that end. The elimination of income taxes on tips and overtime. So Trump is suggesting that tipped workers and employees earning overtime will no longer have to pay federal income taxes on those specific earnings. So I know when I used to, as far as like when I used to work W-2 in corporate America, and I had those overtime pay, and you go and look at your check and you're like, did I even get the overtime pay? Because a lot of it went to taxes. Where's the money? So this will be a huge benefit to a lot of people that hey, once you get over that threshold of working overtime, now you can see that those particular earnings are not going to be subject to income tax. So this would benefit industry workers, restaurant staff, bartenders, hotel employees, things like that. And a lot of individuals that tend to work a lot of overtime, but essentially it is eliminating income taxes on tips and overtime. The next thing I'd like to cover is the repeal of the $10,000 state and local tax. And this is essentially the SALT deduction. Now, in the state of Florida, we don't have this concern as much because we don't have those state taxes, but we do have some local taxes, things like that. But a lot of other states, say higher tax states like New York, California, New Jersey, that are getting hit. There was a limitation, a $10,000 cap that limit their deduction. But this cap is heavily affecting those people in those high tax states because they're taxed so much and they could only deduct so much of it. So Trump is proposing to eliminate this cap, allowing those taxpayers to deduct, the full amount of their state income taxes. So that's going to be a huge benefit for those people that are paying heavy state taxes. And then for the higher income earners and those high tax states, they will benefit as well, especially we know those middle income earners that don't necessarily have a business, that don't get those deductions that a business does, but pay heavily in taxes. This could be a huge benefit for them because there wouldn't be essentially a cap. So it would assist them with paying less with income tax on the federal side. The next thing is the reduction in corporate tax rate. So the corporate tax rate would go from, it would lower the corporate tax rate from 35% to 21%. Well, the corporate tax rate was lowered from 35% to 21% back in 2017. Now, Trump is proposing to reduce it even further to 20%. With also a special rate for specifically US-based manufacturers. So this can actually assist with keeping those prices more manageable, especially when it comes to those tariffs. So as those tariffs hit the business owners and things like that, because they have, or those corporations, because they have this buffer when it comes to this 15% US-based manufacturer rate, it can assist with that gap as far as the increase in expenses or the increase in consumerism, as well as decreasing the corporate tax rate from the 21% to 20% effectively. So this is essentially kind of leading to help more of your higher wage earners, and then also to push more job creation overall to help with that spending deficit, especially with the transition with things becoming a lot more expensive. This could assist with that. Where many will see it as, hey, possibly, hey, these large corporations are getting a tax cut and it's not assisting. Generally, what ends up happening with large corporations, when prices go up, they have to push it out to consumers. So consumer prices go up as well. So, so in this case, hey, it's like, hey, we'll cut the income tax rate, don't increase it so much on the consumer side. So we'll see. We'll see how that pans out, if it even goes into effect. Yeah. All this is kind of like just proposed. Nothing has completely been officially passed yet. So we're all just kind of listening out to see what the effective changes are going to be. Okay. Uh, all right. I want to make sure, because I'm not sure what's going on. Okay. All right. The next is for the elimination of the estate tax, which is your death tax. So currently, the estates valued over $13.99 million in 2024 are taxed up to 40%. So yes, we're talking about those higher income earners. This is not affecting like your, common folk, or the general population. These are those people that are inheriting large assets, that are inheriting large estates. So Trump is proposing to eliminate the estate tax entirely. Like I said, currently these estates that are worth over $14 million are being taxed up to 40%. And this is 40% of the amount being passed down to their heirs. All right, so it would affect those high income earners, those families and those businesses that are inheriting large assets and things like that. But nonetheless, it would be a benefit to them. Um, and it would also affect, of course, the reduction in, the income or the money being received to the Internal Revenue Service. So, less money on their end. The other is the deduction for auto loan interest. So Trump is considering allowing taxpayers to deduct the interest paid on their auto loans. So this is huge because a lot of people purchase a vehicle every tax season. They go through the year, they purchase a car, they get it repoed, and they go through the cycle again. Or there are people that essentially they finish paying off one car and they go into purchasing another. So this would be a huge benefit for taxpayers to say that, and this doesn't have to be a business owner. This is just a general taxpayer, to be able to say, hey, I'm able to deduct the interest that I'm paying on those auto loans. So just like your for my homeowners deducting that mortgage interest, now it would be essentially saying, hey, I'm going to also be deducting the interest on paying for my vehicle. So this is an additional deduction that our vehicle owners, or financiers, I should say, will be able to take advantage of. And this would be a huge benefit to those middle income classes, even for the middle income classes, or those individuals that are in the middle that don't necessarily get the advantages of the earned income credit and things like that. But they still are faced with a large tax bill. Maybe they're doing an itemized deduction, and this could help with lowering their tax bill. The next, I'm going back in tariffs just a little bit, to mention that Trump is proposing a 60% tariff on China imports, and 100% tariffs on foreign manufactured cars. And that's specifically aimed at Mexico, Canada, and European auto manufacturers. So yes, this would make the purchasing a foreign vehicle extremely expensive. And consumers essentially will see drastically higher prices on cars and electronics and things like that, because of that. Yes, that's a huge jump, but nonetheless, it is a proposed tariff hit. The next I would like to hit on is Trump's tax cut extension, as far as reducing the overall reducing the national debt. So this is essentially what he's promoting or pushing for is to decrease the U.S. debt overall, because of our national debt is ridiculous. Trying to counteract that with the tariffs and different things like that. But this could also, a lot of these changes will decrease the amount that is going to the Internal Revenue Service. So that can also lead to higher interest rates and higher inflation, and also cuts to programs such as Medicare and Social Security. So could be a pretty interesting time with potentially seeing some social programs like Medicare and Social Security get cut, to counteract these things. Choo, 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 choo. So generally, I'd like to kind of bring this all together with explaining that the major effects of this is going to affect the middle and higher income earners. The lower income earners won't see much of an effect other than the extension of the standard deduction and the child tax credit. Other than that, a lot of these tax changes are going to hit your middle income earners, small business earners, your higher income earners, and the industry workers. So that's your tip, the people that work on tips and for that do a lot of overtime. But definitely take a look at what I went over and covered. Thank you for your patience tonight with the technical difficulties. But yes, y'all, hopefully this is beneficial. I will see y'all in 2 weeks for another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up.